Hello guys. So it says we have excellent collection right now. So I have some issues with this live today. Okay, so let's see. If you are looking at me, if you are watching, please say hi. At least I will know. Hello, rahmatullah. Sorry, guys. I have some issues about this live, but I'm trying to fix it right now. Okay. So let's see. Thank you very much for coming. So I'm trying to make it look clean. I am in the new live of YouTube, so I'm not used to. The other doesn't work. Footnote works. Thank you very much. I'm good. Alhamdulillah. كيفك? So I'm trying this new live for YouTube because I have never gone here before. So bear with me, guys. Bear with me. Let me see here. So I'm trying to fix it. So bear with me. But if you are Rahmatullah Modi said everything looking good. Thank you very much. But I am getting used to the old one now. When they change, everything changed for me. So I see the live which is very very small. I can't make it that good. That's why bear with me, guys. So until I fix this thing. Thank you very much for coming. And for this session, I will be continuing speaking until we finish this section. So as we see in the market is looking good, and there is until now there is nothing to worry about. Although this week it's not that much strong, but it's very good because the market is still strong. It didn't become weak this week, so it's still strong, and most of the stocks are doing good. Most of them, not all of them, as usual. And for me, for this session, I will try always to the subject of this time is let me write it. So probabilities of stock uptrend. I have talked about this subject very many times ago, and because because this subject is so important for us. Okay, it's so important because if you don't understand the probabilities, how things work, you will never understand how to make money from the market. Okay, so people they always see stocks, okay, going here and there. Some they go very quick, some they go very slow, and because we have too many stocks, this is the problem. It is good thing and it is bad thing. Now there are some countries where they have only 50 stocks or 30 or 6. Okay, so when you have only 30 stocks, you can easily determine what are the good stocks, what are the bad stocks. The probabilities will be clear. So yes, you will never know which stocks will be doing more than the other, but you will see the strong stocks begin first, and when they go very, very good. Okay, so these probabilities you will see when you follow closely, because most of the people, they see stocks one time and they forgot them another time. And let's say you buy a stock, whatever is the price, $10 or 20 or 60 or 100, whatever is the price. You bought it for a few days, it doesn't work, and then one day you get fed up with this stock, you sell it. Okay? This is the first thing you attempt to buy this stock. You search, you find it, whatever is your means of searching and scanning and what are your criteria, but you find the stock and then you buy it. Okay? So, and then after a few days or a few weeks, you get fed up with this stock, you don't make money, you begin to lose money, so you decide to exit the stock. Okay? So you exit the stock, but instead of following this stock for a few days or a few weeks or a few months, just to put it in a list and to follow it again. This is what I do in order to make sure that the stock that I bought was not a good one for sure, not just one time. Okay? So most of the people, when they buy a stock, they buy it for one time and they forgot about it. Now, it seems to me that sometimes this kind of stocks, they come back. After a few days, a few weeks, or a few months, they come back. And when they come back, they come very strong. And you can buy it on the same time you buy it last time. Let's say a month ago, or a week ago, or 2 months ago. Now, when you buy it, again, you might, in terms of probabilities, you might see that this is the time, the good time to buy. You are mistaken in the first time, but in the second time, you are not mistaken. So you begin to see your stock is going good. You begin few days, few weeks, you begin to see the profits. And this is how the trends they go. Sometimes the trends, they don't go always with the same time, with the same week or the same month. Sometimes some stocks, they are lazy. They don't go that fast. Lazy, it means people, they don't buy them on time. Okay? So this idea of buying again is always a good thing, and you should always follow. Okay? You should always follow your stocks. That's why in our subscription with the guys that I teach them or that I train them, always we have what we call a waiting list. I put all the stocks that we bought and we sold, and we put it aside. Okay? And I teach my students, just to get another opportunity to buy, you just buy. Because the stock before, it was excellent to buy. But in terms of probabilities, understand that any stock that you buy, it should never be 100% true. Like successful. So sometimes you buy it, but you are mistaken in time. So although you have your criteria and it's very good, but the market does not support this stock at that time. The market, when I mean the market, it means all the people, the participant in the stock market, because you are not alone. You have mutual funds, you have institutions, we have traders, we have swing traders, we have penny stocks traders, we have millions of traders in one stock sometimes. Millions. Some big stocks, you have millions. Why? Because all over the world, they are here trading this stock. So don't understand that you are in USA and we have our market and that's it. No. Right now, everything is connected. So someone in Japan, he can come here, he can open an account in America, and he can trade any stock. He can invest in any stock. Okay? In China, people in China, they can make an account and come here, and they trade our stocks. In England, France, Argentina, in Africa, in Australia, although there is a fire now with Australia, but it's okay. People, they trade. If it is snowing, or it is raining, or it is hot, or it is cold, when the market is open, everybody is here. Okay? So, this kind of probabilities that I am speaking about is that stocks are not the same. What does it mean? They are not in the same when they begin. But you can find a lot of stocks begin on the same time. Is it because of the market? The market, there are news. People, they talk a lot about stocks, about this one. So people, they hurry and they buy. Because of this news, because of this opinions of analysts, because of the media, because of CNN, anyone who has influence on people. Okay? And you see that on TV when some people, they say, oh, just go buy this, sell this, buy this, sell this. So if they have millions of people following them, they do what they ask. It doesn't mean that he is right, but he influenced people. And understand that the whole market is made of human feelings. It's made of feelings. Some people are logical. They trade, they know how to trade, they make money. Some other people are not logical. They trade by feelings. They trade by recommendations. Do this, don't do that. So they don't know what they are doing. They don't know even the stock they are trading, how it is, or how it moves, or when to buy it, or when to sell it. But they do what they are asked to do. Although the analysts who say this, they have never seen these people. They are hidden. They are just watching their TV, and they say, "Oh, okay, this stock you should buy it because this year it will be doubling." Okay, it double. You double your money, you triple your money. This is what they say, but in true, it shouldn't be like that. Okay, so Food Networks, he said, keep an eye on Groupon. I hope I pronounce it well, which is GRPN. I will take a look. I will take a look on this stock, Food Networks. I will show you on the chart, and we try to see what's going on. Fabian said, hello, I will be here for about 45 minutes and I will watch the rest of the video tomorrow. Thank you very much, Fabian. You can, Fabian, I know you are one of my students, but you can ask me questions, direct questions, and I can make you videos on the subscription. It is better, especially when they are related to specific stocks or specific movement or indexes or something. But here, as I know, most of what we do here is just give you a general idea about the market, about stocks, about ideas that I develop, and I shared with you guys. Okay? Smith Patel, he said, do you day trade or swing trade? Yeah, most of the time I swing trade. And all my channel, I speak more about swing trading because we follow trends. Now, if you catch few trends in the year, that's what you need to make money. You don't need to wake up early in the morning and to have time to day trade daily. Okay? Some people, even when they are very experienced trader, they go to futures, because futures, it is 11 hours. At any time you can enter in trade. And there is a big movement in futures. Okay? So because it is leveraged, you control a lot of money by small money. It's like options. It's like forex currency pairs. So with little money, 2,000, 5,000, or 4,000, you can trade and you can make money. Okay? So this is the way day traders, they work. But for us, no. I am not... I used to be a day trader, but I find that swing trading is better for me. Now, it can be not good for you. Okay? So each one has his own space or his own things that he feels better. Okay? Now, NASA, hello everybody. Thank you very much, NASA, for coming. Ben Michaud, can you talk about trading on price action? Yes, I always, Michaud, your name looks like French. Ben Michaud, it looks like French, but do you speak French? Can you talk about trading on price action? Now, price action, in day trading, if we talk about day trading, I have in day trading, I have only two training about day trading, which is going long and one which is selling short, because this is the two ways that day traders, they do. Most of the time, day traders, in order to understand, without any news, without anything, you can make money from day trading if you just look at how the price moves. And this is what day traders do. They follow the price. But the price, sometimes it is moved when there are news. Okay? So that's why day traders, most of the time, they try to find news, any news, in the whole day. Because understand that day trading, it is not from 9:30 to 4 o'clock. This is the normal hours. Normal hours, especially the two first hours in the morning, they are the best, because where there is the big movement of the market. But the movement can move in the afternoon. Okay? It can move at any time. And there is pre-market, which is from 4 a.m. to 9:30. 4 a.m. It means 5 hours and a half. Things can change. And now, most of the time, no one is going to go there at 4 or 5 or 6 o'clock to trade. But, especially in stocks. But if there is a news, people, they go there and they trade. It's very easy. you go to your broker and see if he lets you trade from 4 o'clock in the morning to 8 o'clock in the afternoon. Try to see that first, because if you are a day trader, most of the time day traders they need a pre-market and after market hours trading. Okay, why? Because of the news. Sometimes the news comes at 7 o'clock a.m. Now 7 o'clock a.m. the market is closed, but it's not closed for everyone. You can go before hours and you trade. It is open. It means when you want to trade, if there is a volume, you can trade. Volume, it means people are coming to buy. And when they see something which is very, very good, I'll give you an example which is a very, very simple thing. You can do it. You can see it. You can do it. You can follow it. The best thing I can give you is earning news. Earning news is one of the biggest movers in stocks daily. There is no other thing that moves a stock better than earning news. Earning news is known. It means, let's say for Facebook or Google or Apple or Amazon or any other stock, they say you tomorrow, for example, on Monday, just an example, okay? On Monday after market close, okay, the earning news, the company will announce the earning news for the quarter, the ending quarter. Okay, so this is a big news. Day traders, what they do, they wait. They don't buy, they don't sell anything. They wait for the news and see what's going on. If the market is going up after the news, they will buy and they will do a trade. Now this trade will finish before 8 o'clock. So understand that. Okay, I will give you. Hope I can make it with. I can make it with this example. Okay, as you can see, guys, as you can see, I will go to the explanation and explain to you this. So let's. I don't see the. Yes. Right now, as you can see, the screen is white, so I will be explaining something. So, okay, so I know you don't see anything, but I will tell you. Okay, this is 4 p.m. Okay, 4 p.m. is here. So here the day trading has ended 4 p.m. Okay. Let's say, I'm just giving an example, okay? So bear with me. Now, a stock is called XYZ. This is just an example, a name of an example of a stock. And let's say it is $100. This is the price. This is the price, close price. It means at 4 o'clock, it is $100. Just an example, okay? The close, $100. It's 4 p.m. And they say that the earning news is today. Earning news is today. Most of the time, the company doesn't say exactly. But let's say the conference is at 5 p.m. Now you will see that from 4 to 5, most of the time, nothing happens. But at 5 o'clock, they begin the news. After seconds, you will see either the stock has gone down to, let's say, to $90. It means it has been going down. Or it has been going up and you see it, for example, 115. So this is the seconds. People understand in seconds what's going on. Is it good news or bad news? They decide either to buy long, okay, or they decide to sell short. This doesn't take seconds. So this thing is done by day traders, mostly day traders, but swing traders, you can do that also. Day traders mostly are the guys who do actions in the day. But understand that the market will close, it means the exchange will close at 8 p.m. It means there is no orders that come after 8. If you have an order after 8 here, let's say at 8:15, and you want to exit, you can't exit at 8:15 or 8:01. You can't. The orders all the orders are set for tomorrow. Okay? Are set for tomorrow. So what do day traders do? They sell. If they sell short, it means they will buy long. They buy their shares before 8. Let's say at 7:45. They get since they sell short, they buy the shares in order to give to the broker, and they close their trade. Now people who buy at 100 here at 5 p.m., it is now 1:15, they will sell their shares and exit. So day traders are safe when they sell. It means they get out of the market. They are not, their money is not going to be hold with shares to the next morning, because there is a big risk of things to change. So they don't want that. They want to see what they trade. Okay? So this is a kind of price action that you should take account, and you should understand it. Now, you should understand it. You should go in a practice, even in virtual, but you should practice. 1 month, 2 months, 6 months, 1 year, 2 years, you practice. Sometimes you buy, sometimes you practice, sometimes until you feel comfortable with trading the news. Because the news is a difficult thing. It's not easy. Okay? Sometimes it is good news, but the stock will go down. Sometimes it is bad news, and you see the stock is going up. So it is tricky. So it is not automatic. It is not automatic. It has always surprises. Okay? So it has always surprises. So you should understand that. And guys, if you see in the chart at the after close, because let's say okay, here is, let's say, 1 day from here to here. This is the day. This is from 9:30 to 4 p.m. This is the trading where all the good trading happens in the market. All the people, the mutual funds, all the guys are here. And there is before, from 4 a.m., there is another trading here. And there is after 4 p.m. I will just make sure you understand this. Okay. Okay. So, for example, I will give you just an example. The stock market today, from 9:30 to 4 p.m., let's say it was going down like this. 4 p.m. here, when it stops, it stops at 100. This is the trading day. For example, here it begins in the morning, 9:30. Let's say it begins at $98. This is just an example, okay? So the stock lost $2 in the day. Now with the earning news, you see, let's say 5 p.m. here is the news here. This is the news. You see, most of the time, the stock in the after hours, this is called after hours. It means after 4, after hours. Trading after hours. After hours, it means after the trading hours from 9:30 to 4. You see that the stock is doing nothing like this. And then, when the news come, you see like this. And you will see that the stock is 115. This here, what you see here, this line that you see, it doesn't take time. It takes only 1 second to go from 100 to go to 115. It's only taking 1 second. And we are still in 5 o'clock. Let's say now after the guys in the company, he began to speak about company, and then he tell the news that the earning per share is better than the analyst. For example, the analyst said that we have $2 for each share for the earning. So hope you I have spoken this many times, but I will speak it again. The analysts always give an estimate how much the market will make for this quarter, because we are speaking about quarter. Quarter is 3 months profit. 3 months, okay, profit of the company. So it makes $2 for each share. So it means that if they have 1 million shares, it will be $2 million. Okay, so $2 per share. Now let's say the company said that we make $2.80, so it is big. It is more than the analyst says. What does it mean? Most of the time, this news makes the stock rocket in 1 second. Now after that, till here 8 p.m. when the market really closed, the exchange closed, you can see sometimes it goes up a little bit, sometimes it goes a little bit down, but still it is more than 100. Okay? So this is the deal if the news are good and if the market is going up. But this thing you can't get because this is for the professional people who use billions of dollars to throw in the market, and that's why it pushed the price so big that, okay, so big that you can't reach them. So it's very difficult. But here you can trade very well, because when there is this line like this, it stops, and then you see that the stock is going up, down, or it's going up according to what the people do afterwards. These are the traders, what they do. Either they sell short or they go long, depending on the stock. Okay? So I showed you how the news affect the price action. Price action is done by people. Because of the news. They hear the news and they decide what to do. Okay? So the price doesn't go by itself, up or down. So this is just an example, okay? And it has nothing to do with the day, because some people, they say, oh, why the stock is going down always for 1 month or two, and then we have a gap up. Okay? Now, in the morning, what do you see? Because this section here, because this section that I put in blue, this section here, all this section here, from 4 p.m. and 8 p.m., you don't see it in the chart. You don't see it. You see it only in your broker chart. But in your regular chart, you don't see it. Now, what will happen the morning, next morning, I will show you what will happen. Okay? So, I will show you. Let's say the stock has been going down like this. Many days, just many days, like an example. And this is the day when we see $100. This is today. Okay? $100. This is today. And then we have the news here. After the market closed, this is the news. And then in the next, this is, okay? This is the day of today, okay? Today. Tomorrow, you will see a candlestick like this here on the top. And it is $115. So this is what we call a gap up. A gap up. Because there is a gap between this candlestick, which is the red candlestick of yesterday here, and this is the new one for today. That's why what makes up. Now, why there is a gap up? Why it is not just here, near the other one, it is $115? Why? Because this is how the stock moved in the after hours. After hours, the stock has moved, but the chart doesn't show it. Our regular chart doesn't show you the after hours because people, most of the companies look in the day what happened. After hours, they are not interested. They see only if there is a good news, there is gap up, they will see it tomorrow. But they know about the news. They know it could be a gap up or gap down. Okay? So this is what we have, a gap up. You can have a gap down when things go bad. Okay? Now, if we have a gap down, it's the same scenario, the same thing. I will just give you an example. So here we have 1 day, 2 days, 3 days, 4 days. Let's say we have 5 days, stock is going down. And this is here, the close, and this is here, the news. And then the stock will begin to next day here. So here it was 100. Here, let's say it is $85. So here there is a gap down. A gap down because there is a gap between this one and this one. And you ask yourself, what makes this gap down? It is just the news. The bad news makes this gap down. Okay? So this is just to show you how the day traders, they work on news and how do they take action. Okay? But I will speak about what's going on in normal thing. So let's answer some questions and then we can go back. And I explain what's going on with regular time. So let's read some what you have written, guys. So NASA say, hello everybody. Hello NASA. Ben Michaud said, can you talk about trading on price action? Ben Michaud, I'm trying to explain day trading, and I have showed you example of news what will happen with day traders, how they act, and how they see and they forecast prices according to the news. But nothing is 100% sure, so they try. It's a skill. In order to become a boxer, you can't just go one night and do boxing in a ring. You train yourself good, and the next day you are going to face Mike Tyson or Muhammad Ali. Okay? You are going to face them in the morning or the next day because you have trained one night. This is what we call skills. In order to make money in the market, you need skills. Skills are things that you can acquire through knowledge and practice. So some people they don't believe in working. They believe in miracles. They believe in gambling. You buy a ticket with $2 or $5 or $10, and you make $200 million because you win. Yes, you can win. One chance out of 10 billion chances. So your chance to make the jackpot is so small that it becomes non-existent. And this is how the companies, they make money. The government and the companies that they make the lottery, they make a lot of money from people. It's just because of this feeling. You want money, but you don't want to work. You want just to play the game. And this game is, most of the time, you are a loser. Okay? So, instead of making money in the stock market, you should not be a gambler. You should be someone who knows how to make money. This needs time. Okay? So, Wiseman, hello Karim, good evening. Thank you, Wiseman, for coming. Thank you. James Armstrong, good evening. Good evening, James. How are you? Rahmatullah Moody, can you give your thoughts about stock CPSE? Yes, I will check these stocks. We have some stocks here. Someone has said Food Networks. He said Groupon, and you said SPCE, and James Armstrong said, what are your thoughts on stock symbol STZ? STZ, I know it before. It's a drug company. I have traded before, but I didn't see for a long time. It's a big company, I guess. Duna, hello teacher. Hello Duna. Ben Michaud, I have seen some traders know how if the stock is good or bad just by price action. Is this true? Yes, this is what we are teaching. Michaud, what I am teaching. It's strategies that you should acquire and skills that you should do. And I have my subscription for that. It means we search for stocks, we scan for them, and then we choose them, and then we follow them. We have a trading account. You can check what we are doing, how do we buy, how do we sell, how do we follow, and we have stocks that we put in a waiting list. This is what we do. If you are interested, you can just Ben Michaud, you can just follow us, but it is for USA stocks. If you are here in the USA, you can do it with other markets if you have the scanner to scan stocks and to see them. But my strategy is you don't need scanning. If you have few stocks, you can check them and see my rules. But the problem is if the stock market that you are in is big, so you need a scanner. America here, we have a lot of free scanners, but in other countries, they pay money to scan for stocks. This is stupid. This is too much stupid in other countries. And they ask them money. For here in America, we are happy. We are lucky that scanners are for free. Okay, they are for free. But the criteria, you should know what are the criteria, because without criteria, you can't do anything and you don't know what you are doing. So Mishu, if you are interested, you can go to my website for subscriptions, and you can subscribe, or you can order a training without subscription, and you understand. It's very good that you can send me an email, or you go directly. So I will put my email, and I will put my website, and just go and check later. You can click them on now, and then later you can okay, you can click on them. In all of my videos, you find my email and you find my website in the description. In any video, just take any video, you find them, but you can take them right now. Okay. So Ben Misho said, I have seen some traders know how if the stock is good or bad. Yes. To know if the stock is good or bad, it's not 100% sure. It's not. But you have they apply strategy and follow the strategies, and they can make money. But it doesn't mean that they know the future. No one knows the future. If someone tells you that any stock I buy, I am winner, this is not true. He is the biggest liar in the stock market. Okay? Because you can buy 1,000 stocks. You can get even 900 stocks true. 700, 500, 200. You can. But telling me that each stock you buy, you are a winner, this doesn't exist. In terms of probabilities in the market, it doesn't exist, because it is not. No one knows the future. Strategies are things developed by skillful traders, and most of the time they work. But it doesn't mean that each stock they buy. For example, for us, you will see me buying stocks, and I sell them. I lose little money as usual, and I sell them. And I show them. I show when I bought them, because my students follow me directly. When I put a video today, I say, okay, today I bought this stock, and this stock. You check it on your chart, you find it. So there is no way I say, I buy this stock last week, and if it succeeded, I post it. I say, oh, I did this stock and they succeed, so I always know. No. Okay, the truth is the truth. So you should trade using your strategy, and if it works, it works. If it doesn't work, it means it doesn't work. By proof. Okay? By proof, it means you will see it. It's not something that it is hidden. But most of the people, they don't want to get skills. They don't want to practice. They don't want to learn. Okay? Now, you see, for example, for my chat, I have 14 guys. You guys, 14 guys. You want to learn the skills in order that you become a true trader, independent trader from me. If you get the training, you follow me for a few months or 1 year or two, and then you become your own. And you know what to do, you know everything. Because I teach to trade. Okay? But if I am saying I know everything, you will find that I have millions of people following me, because they think I know the future, and I give them stocks and they say, buy this, you will make money. So why do you learn? Why do you learn if you can make it easily? Okay? I see people who are very respectful people. I see them online but they are lying. They are lying in order to get money. I see someone, he said to them, if you have $100 in 1 month, I will make it $100,000. Can you believe that? It's like more than gambling. Just go and buy this ebook, or buy my training, or follow me, and you will make $100,000. This is not true. Guys, stop dreaming about a business. A business, it goes up when you know the skills. You can develop yourself, you can make money when you know the skills. Okay? Now, let's see someone else. Smith Patel said, is it worth investing in 100% stocks if you don't need the money for 30 to 40 years, or should there be some bonds in the mix? Okay. This, you should ask Warren Buffett, because you are asking something about investing. I will tell you something about bonds. Okay? In order to understand what's the difference. So, I will go to the explanation board, and I will just explain what does it mean bonds, gold and silver, and stocks. There are three main things that you see as a vehicle of making money. We have stocks, we have gold and silver, and we have bonds. Three things. There are less things like warrants and other stuff, but we are not dealing with them. We are dealing with the basic thing in the market. Okay? So if you take the chart of which one is the best for 100 years, you will find the stocks are the best thing you can do in your life in order to invest. Now, gold and silver, they lose their value since 2011. I will just show you right now, and to explain to you, because some people, when they use bonds, they think they can make money. I will tell you that most of the time you are not making money. Sometimes you are losing what you make. I will tell you an example. Okay? So we stop at Smith Patel. I explain this, and then we can go to other things like stocks. Okay, we stop at Smith Patel. We explain what's the difference between bonds, gold and silver, or precious metals, people they know, and stocks. Okay, so I will just try to explain this. So just wait a minute until you see it, and then, because there is when I am talking, you listen, but the picture doesn't come that fast, so I will be waiting until you see. Yes, now you see the thing, so let's go and explain. Okay, now listen, look at this. Now, if you take this as a chart, you find that stocks are like this. Let's say we take 1900. It means 20th century. Let's say to now. Okay? You will see this in blue are stocks. If you have put your money into stocks, this is what you get. Now, if you put them into what we call gold is here. Gold and silver. Now and then you find the worst thing you can do. The worst thing you can do is you go with bonds. The bonds are here. You can go and check it. Just put a comparison between stocks, gold, and bonds. You will find this chart. Now, what does it mean? Why is that? Why stocks are better than... I will give you an explanation that it is very, very important to know. Stocks are companies. They are companies. Understand that. They are not something which is static. Companies grow. Okay? Companies grow. It means, let's say you take Walmart. Walmart begin with one store. Okay? It begins with one store. I'm not saying 1900, but I'm just giving you an example because I think it's 1983. Walmart has entered to the stock market, and before in the 60s here, Walmart has begun with one store. Okay, only one store. Now here, let's say now it has 13,000 stores. Do you understand what does it mean? From 1 to 13,000? It means if the store is $1 million, this $1 million, it becomes $13,000 million, which is $13 billion. This is just an example, okay? This is about stocks. So stocks are faster investment. They are faster because it relies on companies. Companies, they begin small and they go big. Okay? They become big. And the stock was small. For example, companies like Walmart, it was, for example, I think 85 cents. 85 cents in when it began, 1983. Walmart, you can check it, was 85 cents. You can check with me, guys, the chart and see. Okay? Now, this is about stocks. Now, you have understood now about stocks. Let's go now to gold. Now, gold, here is the problem. Why it doesn't go that fast? Is because when you buy 1 ounce of O's, 1 ounce of O's, I think it is 31 grams of gold. Okay? 31 grams of gold. Okay? Let's make it clear. Okay? Okay? 1 ounce of gold is 31 grams. If I tell you something, I know you don't believe. So I will take this now. Please, if you want to go back to this, you go back later. I will just to explain more, so I want to erase. I will leave this thing here. At least you will understand what we have done before. So this is a stocks. This is second one here is gold, and the third one is here. The third one, which is bonds here. Now we are speaking about gold. I say 31 grams is equals 1 oz. You can check it is 31 grams point something. So it's not exact, but it is in general this. Now, if you go to 2011, on April, how much was 31 grams of gold? It was $1,884. Now, in 2020, how much is this 31 gram now? We are in January 2020. How much is it now? It is 1,300. Stupid people who are buying gold and they say that it is better? Who is this stupid person to buy gold? In 2011, it was $1,884. Now it is $1,300. Are you making money in 9 years? In 9 years, are you making money or have you made money? No, you lost money. This is why gold, it's not a good investment. Stupid people who are speaking about gold, it doesn't change the value. Is it change? It's just because they want to sell you gold and silver into coins. I'm not speaking about collectors, because I collect coins. No, I'm not speaking about collection, because collecting coins is different. It's a business. But buying gold, thinking that it has a good value in the future, this is a mistake. I give you the mistake. I challenge anyone. If you know someone that tells you that you buy gold and you make money, this way, give him this example. Tell him that in 2011, in April, gold was 1,884 with 1 oz. Now it is 1,300. Give me the proof that gold is better than stocks. It is not. Now another thing, guys, try to understand. If you buy 31 grams of gold, which is 1 ounce, where 1 ounce is one coin. Some coins it has 1 oz or 1 ounce coin. It is made of gold, and they sell it to you. They sell it to you for, let's say, $1,300 or something. Okay? This is because they produce these coins and they don't know where to sell them. So they do advertise that gold doesn't change in value, but it change. Because for me now, I can buy more gold today than in 2011, because 2011 was 1,884. Now it is only 1,300. Now for silver it is worse. In silver, in 2011, it was, I think, $46 for the ounce, which is 31 grams. Now it is, let's say, 17. How much you lose? You lose around 60% of your money if you bought on 2011. Try not to follow stupid people in the market. Stupid advertisers. They advertise that if you buy golden coin, you can make a fortune. You can be rich because you... And the second thing, does 31 grams of gold or silver, doesn't it change to 1,000 grams in the future? Is it true? No. But one share of a stock, the value of one share of stock of Walmart, it was 85 cents. Let's say now it is 120. I don't see the price, but let's say it is 120. This is the change. The share has become 120 times bigger because it was 85 cents. Now it is $120. I don't see Walmart price, but I just give you an example. But 31 grams of gold, Can it be 1,000 grams now? It doesn't change. So you get ripped off. You get ripped off. Okay? You get ripped off because you buy gold. And understand that if you want to sell, you don't find people who buy. This is another problem. And if you have gold, they ask you for a fee to hold it in the bank or in whatever thing. Let's say you buy a lot of gold. Let's say you buy $100,000 gold. 100,000 gold. Let's say you have an investment in gold. They will put a fee in order to keep it for you. When you want to sell it, there is a fee. You don't find someone to sell it, except when you sell it lower and lower than what you pay for. So they rip you off because of this gold. Okay? Now, let's go now to the last thing, which is bonds. Okay? Now, in order to understand what is bonds is you lend money in order to get an interest rate. This is what does it mean, bond, to understand it. Okay? But the problem with bonds is that, let's say you buy one bond. Okay? You buy, it's $100. You bought it with $100. Just an example, okay? They will give you 7% in a year. Now, 7% of 100, when the year ends, it will be, your money will be 107. This is what they tell you for bonds. But the thing they don't tell you is that the price is not, this price is not static. It can go down, let's say, to $70, because bonds are traded. It's like stocks. They trade them. Now, if this bond becomes 70 at the end of the year, in 1 year, what does it mean? It means you have lost 30% and you gained 7%. What does it mean? It means you lost $23% of your money, thinking that you make money. And it is a sure thing. It is not a sure thing. Because bonds price, this, if you don't know, bond price change up or down. If it's changed down, you will lose money. If it changes up, yes, you can make more money, little more money. But here is the example. The bond, for example, they give you 7%. What if the market has gone 50%? The stock market. What if it has gone 50%? Are you getting this 50% plus your 7%? No, you are only getting 7%. So the person who takes your money 100%, he put it in the stock market, he gets 50%, he will give you 7%, and he will take 23% from the stock market, while you get 7% from bonds. Now, who is the winner? It is the guy who borrow money. The company, it could be the government, it could be municipal city, it could be a county, it could be a state, all this kind, it could be treasury, federal treasury. All these guys are getting your money for a percentage. But when they invest it in other means, they can make a lot of money from you. That's why bond is the last investment that you think of. Then we have gold and then you have stocks. So this, I give you a proof. In history, you can just check it. It's something that you can check in 1 second. Go and check. If you put $10,000 in stocks, you will have now millions of dollars if you put it in, let's say, in 1900. And they will show you gold, that your 10,000 is becoming 200,000 or 100,000 or whatever. If you buy bonds, you have less. So do you understand now the difference between stocks, gold, and bond? If you want to invest, do like Warren Buffett. Warren Buffett doesn't buy gold, does not buy gold, does not buy bond. He doesn't give his money to people. He lend, it means he lend money. He will never lend. He doesn't like interest rates because he studied economic. And this, most of the people, they are what we call ignorant about economics or our economy or any other economy. Okay? So I'm just guys, since I always excuse me, this guy who's called Devi, stop until I come to you. This guy who's called Brijesh Devi, he say 20-year return in gold is 429. I will come to you. Stop writing too much. You say stop. Okay? I give you an example. Go to my example and check first before you say anything. Okay? Go and check my example. Now, I will deal with your question because your question needs data. You say 20 years. I will check. So don't worry. And you say, are you economist? What? I am an economist. I am a trader. I know the market. Because an economist, do you think Warren Buffett has made more money than any economist in the world? Have you seen that? Do you see Berkshire Hathaway? You are one of those who are still into the problem. Yes, I took large time. You say you are right, but take large time. I take 100 years. Okay? He said, what are your qualifications and CFI? These people, qualifications, they don't trade, they don't know the market. If you go to school, they don't teach you trading or investing. Have you find a school that teach you investing like Warren Buffett? So stop speaking about qualifications here, because qualifications, it has nothing to do with trading. The people, most of the people who succeed, they are not mathematicians. Any mathematicians, if you ask him to trade, he will fail. Do you know why? Because you don't know. That's why in anything I'm speaking about is strange for you. Because you belong to another world of magic. I am not doing magic here. Okay? So, Devi, stop. Listen, stop. I will come to you later. But don't stop my live. I will try to answer the questions of others. and then I will come to you. And please take my email, Brijesh Devi. Take my email and send me an email because I will give you the information, because you seem you don't follow trading and stock market. Okay, so I know you are writing. You say, "What's your review on GE?" GE, I spoke last year, before it kicked out from stock market. I follow it for 6 months, and they say it's a bad company, and they kick it out from in June 2018. I think they kick it out from Dow Jones. Do you understand? If you follow my channel, you will understand, but you are new. But I'm not saying anything. So please, Devi, wait for your turn, because here I'm trying to answer questions as they come to me. Okay, there are some questions that are asked before you. So please stop writing, because you write too much. Stop writing until I come to you, because you are the last one. Okay, so just. You say Warren Buffett is investor, not a trader. Yes, investor, what is it? You invest in fundamentals. You need time. But does he invest in gold and bonds? Devi, stop your questions, because you are asking too many questions until I get to you. Just think about it. Think about it, what I'm saying. Take my example, and then we can come to you, and I will explain to you more and more, because you are new to the channel. You don't understand a lot of things in trading and investment. You don't. I just showed you many information. Try to note the information that I told you here. Put them in notes and try to go online and search for the information I'm telling you. You find me that I am telling the truth of economics. Okay, so let's go back. I will go to Devi last time. Okay. Now the first one who asked about the stock. Let's see, who is this? Yes, Food Networks. He said keep an eye on Groupon, which is GRPN. So guys, right now I will go to some guys who speak to me about stocks, and I give you an overview, or just my opinion. But understand that I will not ask you to buy or to sell, because this is not my problem. If you are following me into my subscription or my training, I can explain to you what to do, and you see my strategies. You should explain. You should understand my strategies and practice before you do anything. Okay? So let's begin with Groupon. Okay? He said to me, keep an eye on Groupon stock. So we will go to the chart, and we put okay, we put Groupon. Okay. Now look at this Groupon. Someone tells me look at Groupon. Groupon, if I pronounce it well, I don't know if excuse me, sorry guys if I don't pronounce the name of companies good, but let's see the chart. For me, understand that I am a chartist. I follow trends. I don't follow analysts what they say about a company. Now, people, they get influenced by what the people say. Analysts most of the time. So check the chart. Groupon, for example, was $5.52 in 26 July 2018. So it was $5.25, right? Now, what is it? It is $2.50. So I ask you a question. Who's this guy who said to me a Groupon? Food Network, a company that was $5.20. It lost more than half of its money. Now it is $2.50. What do you think about it? Do you think that it is making money? It is losing money. So I will never buy Groupon in trading until I see something good. But in the chart, there is nothing good for me. Okay? But if you want in the future, if you want to show you when to buy Groupon, you can send me an email and we can discuss this. Or you just go to my subscription, you subscribe, and you send me your question, and I will make a video for Groupon or for any other stock that you need. Okay? So the first stock, it is a loser right now. Okay? So we don't want to see it again. Let's see the second one that someone says. Yes. Rahmatullah Moody said, can you give your a thought about a stock called Space, SPCE? Yes, look at this. SPCE, what is it? It is an IPO, which means it is a company that it is new in the stock market. It began on the 17th January 2018. It means it has 2 years. Now, see here what did happen. Nothing has happened in this stock except there is a beginning of movement beginning from here, from these two candlesticks, from 28 October 2019 to now. There is a downtrend and there is an uptrend. Now the future, we will never know if it will collapse again or it will continue to go up. So no one knows. This is about space or SPCE. Okay? Now let's see. Let's go to the other stock, James Armstrong. He said, what are your thoughts on stock symbol STZ? Now STZ, I know this stock before because I traded a lot many years ago, but I didn't see it frequently. Okay, let me see it. STZ. STZ, as you can see, it is struggling. It is struggling. The stock, for example, was 225. Now it is 188. It means it lost some money. But fundamentally, I don't know. But it is not doing great, this company. Right now, it is not doing great because it was 225. Here it was 236. If we take the monthly, yes, see here. This is the monthly. The problem is that you did not buy the company when it is small here. The stock was $19. You didn't buy here. Now we are here. from this, which is 233 in the month of April 2018. Now it is 188. So there is a downtrend. So if you want to trade this, you should need the criteria, my criteria, in order to know when to buy it and wait and see. If you are investing, it's another thing. Investment, you should see fundamentals, okay, and you should see fundamentals, okay. Let's see the third. NASA said ABMD stock went from $13 to $460 in 5 years. Much better than Facebook percentage wise. Okay. ABMD. ABMD. Yes. Okay. So, the stock was where it is. Now it is 189, and it was 459, and it was here only like in 2010. It was only $7. But understand that in some years, some stocks have been doing better than ABMD. But look now. Now, from 459, it is 189. The company has collapsed. Okay? And yes, it is better than Facebook, because the stock was $7 here, it was $2. The more they go down. But you can't compare it, for example, by Apple. Apple, it was $1. It goes many times to 300 to 700, and then it comes back. They have split. So if you compare it with Apple, you can't compare it, because Apple have thousands of percent, thousands, not just 400 something. So most of the time you can compare like this, but this is investing. Now in investing, you should wait a long time. Now let's say, I'm giving you an example. Let's say in 87, you bought this stock as $3. The first year, you bought it as $3 or $2. But this is from 87. There are some stocks that in 5 years, 10 years, they go better than 400. They go to some stocks, they have gone like Berkshire Hathaway. Okay? It was $5,000. Now it is $340,000. This is the price. And at that time, 5,000. They say the stock will collapse. They will say it will collapse, but it didn't collapse. 5,000 at the time. And in 1 year, it goes from I don't know how many until 5,000. So I don't know. The chart doesn't give me more than this. 90. But this from 90, it is 20 years. 20 years is a lot. Okay, so let's go back to your questions. Let's see here. So NASA, thank you very much for the ABMD example, but understand that stocks, if you want to do an investment and you see the price, there are some stocks that you can't believe how much they go. You can't believe. But this is in the future, you don't know. So when it is the past, you will know. But in the future, you don't know. So it's very, very hard. JJ, thank you very much, JJ, for coming. So JJ said, hello, Karim. It seems like the 2019 trend continues in 2020. Yes, it can continue. It can stop. It can collapse. Okay, right now things are good, but we don't know the future, so try to be prepared for anything, and like that. Okay, so try always to be prepared. Let's go down. Lighthouse Show, thank you very much, Lighthouse, for coming. He said, hello, thank you very much for the live session. Lighthouse Show, I always do it on Saturday at 9 o'clock. Today I have some problem with this new live screen. It's not the same as the old one. I like the old one, but the old one, I can't go there. I don't know what's the problem. So I use the beta thing for YouTube, and I don't feel good with it. Okay, I don't feel good with it until I get used to this one. Okay. Let's continue. And as I told you, Lighthouse Show, it is always on Saturday, 9 to 11. 2 hours. When it reaches 2 hours, I can't speak more, so I will stop. So, Jocelyn Coty, great teaching. Thank you very much, Jocelyn, for coming. And Jocelyn, since you are my student, if you have any question, specific question, ask me the question by email. I will make a video on the subscription, and I will show to the guys that your question might be a very interesting question. So when I answer it, all the subscribers will watch the video, and they will get a new knowledge. Okay, so always ask questions to get specific answers. Okay, now I'll begin with Brijesh Devi, who likes gold. He say, what's your outlook on gold? Gold. Let me show you the chart. Man, listen, Devi. Try to understand the chart. The chart gives you all the information about the price. So I will give you gold in stock market, how it works. Okay? So let's see gold. Here is gold. Okay, this is the ETF. It means ETF. Okay, ETF. The ETF, what is it? It means it gives you the price of the index of gold, like the price. Now, this is not the index, okay? This is just the ETF. It means it represents gold. Now, if you want to buy gold, you can go and buy GLD, which is a stock, and it represents gold. Now, gold here was $185.85 for the ounce. Now, this it is in stock market, okay? It's not in real. It's not in real thing. In real, it was 1800. I will show it to you. Now it is 146. Okay? So, from 2011 in the year, it lost from 47 to 85. It lost $40. It means, but if we go from the beginning, it was 43. Now it goes to 146. Now $43. Let's say it is 50. Okay? So it is 300% from 2004. 300% in 2004. But you see, stocks have made thousands percent, not 300. You say in 20 years, you are speaking about 2000. Oh, here? 2004. Ah, yes. We should go back, but it didn't. The chart didn't give me. So I will check. I will check the gold price. Okay. Gold price and gold price I don't know the. Okay, I will just go chart and data. So let me so guys, I will show you the chart from a website, and I will see 20 years how much gold has been doing. Two thousand 2020. View the chart. So this is 2020. January 11. USA per ounce. Okay. No, it gives me only 2000. No. There is something wrong with this chart. Okay. It gave me only 1 year. I don't know what's the problem with it. So let's so this is the live gold price, January 10, 2020. interactive chart. So let me see 2010. Let me see if it works. Okay. Look. $2,000. Yes. So the gold was 284 or 82 here. It goes, as I told you, yes, to 1,884. Okay, and it goes down and it goes a little bit up right now to one. It reached now 1,500, I think. Okay, so but if you compare this with any stock or the stock market, it's not the same. Okay, the stock market has gone so wild, more than gold and more than silver and more than anything else. So if you have bought gold in 2000, okay, you will be making money, yes. But the problem is that from 2011, okay, until now, if you bought in 2011, you lose money. And even in all these years, if you've bought money, you are not making any money. But in the stock market, from 2011, if you bought from 2011 right now, you will be making a lot of money. See, for example, 2011, when gold was at its highest. Okay, the year of 2011, in April to September to, this is where here it was the highest, 1,853. Okay, and it goes till 1,858. Okay, now if you see this peak is the highest, and then gold lost its value until now. Okay, it lost. It's not. After that, you will be not making any money, or less if you bought at the bottom. But this is impossible that you buy here in December 2015. It means you can't make it like this. Okay, so it's impossible for a trader to do like this. You can make some bucks if you are trying many times, because it go down, up and down. In trading is very difficult. Okay, or in investing, but you lose money from when you speak about 2011. Now, if you take stock market, if you take stock market from 2011, I will show you Dow Jones. What it does, just to make sure you understand. This is the chart. So when we speak here about gold as an ETF, it represents the index, which is 1884 that we see. It's this one here. So gold, if you want to buy it in stock market, you can buy GLD. You don't buy coins or buy any piece of gold, of physical gold. You can buy gold as stock. Okay, But if you take the Dow Jones, where is 2011? Here is 2011. It was 121. Now it is 288. Look, man, look. Look, man, this is what I showed you because you don't understand. If you understand this, you will not be asking me any more thing in the future. And anyone who tells you that gold is better than stock market, tell him that he is a liar and give me the proof. There is no proof. The proof is what you see. Okay? So from 2011, check. I will show you the trend. From $121 now is 288. Now what does it mean? It's more than 130% up. Do you understand what does it mean 130%? It means if you have $100,000, you will get $230,000. Okay? This is 130%. If you put 10,000, you are making $23,000 in this 11 years. But this is the general market. Now let's see what your gold has done. Your gold you have lost if you have bought in 2011. Okay, so you have lost. Here, let me see this one. You have lost money taking the same year, the high in 2011 for gold. You are losing money because here it was $185.85. Now it is $146. So for $11 your gold, you have lost money. Do not tell me that if you bought in 2011, even if you bought in 2012, it was 174. You lost money. If you bought it in 2013, $164, you lost money. The only thing you make money if you bought it at 2016. 2016, yes, you make little money here from $109 to $146. Okay? So it's like 73%. So the people in stocks have made 130%, and you, if you bought here, which is the good price, which is at 109, so you make only 37%. You see the difference? What I'm speaking? Because gold, it's not like stocks. This is the proof that stocks are better. If you take Apple, you can't do Apple with any silver or gold. Okay? The Apple was $1 in 2001. Now it is 310. How many? It is 3,100%. Let's see. Yes, in 2020 years. You are speaking about 400%. This is 3,100, but it is not 3,100 only. It is more because Apple has been cut into split. So it is thousands and thousands and thousands %. So if you have bought $10,000, you will become a millionaire now with Apple. But with gold, you will never be a millionaire, whatever you do. Okay? So this is just to show you, okay, let's we have 10 minutes left and we stop. So I will try to be very quick to finish this very quick. So I will answer the questions that it is left. So Devi, you can send me an email and I can explain to you more about, or if you have an investment, tell me what you are doing. Are you investing in coins? When did you buy? And I will explain to you more. Because Devi, you have some misunderstanding about gold and silver and stocks and bonds. If you have a misunderstanding, you will lose a lot of money because of your misinformation. Because the people who are talking to you, they don't understand what I am saying. They give you they don't compare apples with apples. They compare apples with tomato. So this will never work. Will never gonna work. Okay? That's why one of the biggest investors in the world is called Warren Buffett. You know him. He has never bought gold. He has never give his money like bonds. Never. Do you know why? Because he knows, he studied economics, and he is someone who studies economics better than me. Okay? And he has never bought gold. Ask him, go to his videos on YouTube. Watch him speaking about gold. Put Warren Buffett view on gold. He will tell you the reason. I have spoken today. I try to explain to you the heart of the business of investing or trading. You should understand before you make big mistakes in your life. I have seen some people who hoard pennies, and he said to me, this is my retirement, because he thinks that pennies will become more expensive because we have copper or because we have silver. That is stupid, because copper and gold becomes cheaper and cheaper during the years. From 2011 until now, copper, iron, all the metals become cheaper. Even gold. I just show you the charts from 2011. 8 years or 9 years, and gold is not doing anything. You lose if you have bought gold. Now, let's see another thing. So, Brijesh Devi, please send me, here is my email and my website, my email. Send me an email and give me your situation. I can explain more for free. I'm not going to ask you anything because you come here for the first time. You are interested in gold and stocks, and I will show you everything for free. Okay? Just to be informed of what's going in the market. When you say, do you have qualifications? Do you think that your CPA or your teacher in economics, do you think he will trade? He will never trade because he doesn't know. When you know the economy, it doesn't mean that you know how to trade or to invest. Investment and trading is art. It's skills. You should know what's going on to the market, because what moves the market is people. It is not someone else. It's not machines. It's people. I buy, the stock market will go up. I sell, the stock market will go down. That's it. Now, Joshua Luce said, can you discuss trading stops loss on positions with 1-3 months time horizon, please? Listen, Joshua, I don't use trailing stops. Okay? I don't use them because they don't work. Okay? Now, I will give you an example, very quick. Very quick. For 3 months. Okay, I will give you trailing stops for example. Okay. I will be very quick, guys. Just to finish very quick, and then I stop this session. Now, if you look, you look at the white board. I will explain what is trailing stop. At least those people who don't know. So, trailing stops is automatic. I will show you. Let's say you bought, the stock is here. It is $20. Let's say you buy the stock here at $20. Your stop loss here at $19. This is your stop loss, and this is where we have trailing stop. Trailing stop, what does it mean? It will change when the stock change. If it goes $1 or $2, the price of trailing or stop will change $1. I will give you an example. Let's say this is where you bought. This is the buy at $20. Okay. Let's say next day, the stock here is at $22. This is the next day. Now, where is the stop? Where it change? It changes here in 21 automatically. Now, why it changes here? Because the stop changes for $1 here. It's $1 from, because your risk is only $1. If you bought, for example, 100 shares, you want to lose only $100 as a stop loss. Okay, this is your stop loss, $100 for 100 shares that you bought. Okay, it means you lose only 100. Now the stock has gone $2, so this $1 it changes to be here 21, because from 22 to 21 here is $100, but the stock is here. Let's say the stock has gone here to 25. Where is your stop loss? Your stop loss here, it will be at 24, because we have always $1. Understand that this is moving. But here is the problem with the stop loss, trailing stop loss. Here is the problem. Let's say the stock has gone from 25 to 23.90 cents. What does it mean? What does it mean? It means you exit at 24. You exit. Okay? You exit. But the next day, the stock from 23, it goes to 26. So what does it mean here? That the stock continue to go up and you exit. That's why trailing stops are not good in swing trading. It could be good in day trading. Day trading it's good, but swing trading no. Because when we follow the trend, when we say 1 month or 2, if you put a trailing stop, it will never gonna work for you, because you will exit all the trades that you are in, even if the trade is good. To understand this, how the trend, you should check my training. It's called training level 7. How to follow the trend. Please go to my website. How to follow the trend. Or you can do a subscription, golden subscription, and you get it for free. Or you do golden subscription in my website and you get it. I will show you what to do, but you should never use trailing stops. Okay? So this is my answer to you. Now, Shikar Sood. Hello, Shikar Sood. Thank you very much for coming. You say how to select stocks for investment. This you need fundamentals. You need a lot of stuff. I think I have sent you, I think, 2 or 3 training about that. But really, I didn't make someone really for the selection. But I have spoken about many things. Please send me an email. Send me an email, and I will send you back the ebooks that I have sent you before, and we will discuss that. Okay? And I will discuss with you the other stuff, because here I am not teaching people how to invest or how to trade. Okay? It is just general information. Now, Live Free said, here my 2020 stock pick, PKD. So, listen, Tara Haskins, she said, hello, Kareem. This is Salahuddin. Thank you very much, Taha Haskins, or Salahuddin, for coming. Understand, Salahuddin, that this is not a teaching, but it is just a hangout I do on YouTube on Saturday night from 9 p.m. Eastern Time to 11. I do it just for guys who are my students or for who are not my students, and we just speak about stock market, gold, and other things. But this is not teaching. I don't teach here, but I give you my information. Thank you very much for coming. Live Free said, here is my stock, which is BKD. Listen, here I am not going to give you stock picks or to ask you what to buy, what to sell. So you give me this PKD. Is it an investment or is it trading? Now, if it is an investment, let me look at this PKD. I don't know. I will check. BKD. BKD. Let's take this is the yearly. This stock was $54. Now it is $7. So why do you buy this stock? Is it an investment or is it trading? If it is trading, you should use my strategies to trade if you are following the trends. But this stock, in terms of fundamentals, it was 54. Now it is 7. Tell me, where is this stock going? This stock was $54. As you can see here, in 2006. Now, in 2020, it is $7.17. What do you think this stock will go? Okay? What do you think this stock will go? Now, if you take trading, which is daily, you see, the stock has been going down. Okay? From $8.47, it goes to $7.17. So it's going down. It doesn't show that it is going up. Okay? So what is it you are doing? Are you trading or are you investing? So either ways, for investing, I don't think it is a good stock for investing. For trading, you should know how to trade. This is what I want to tell you. I can't tell you more than this. NASA said, free students of Mr. Kareem don't need stock tips. We know what to do to find good stocks. Good stocks. Yes, thank you very much, NASA. This guy is new. He doesn't know what we are doing here. This live free. So I explained to him that picks, when you want to pick a stock, are you going to trade or are you going to invest? If it is an investment, you should see fundamentals. I don't think that you have seen fundamentals of this stock. Fundamentals, it means you see this stock is making money, yes or no? But the stock was $54. Now it is $7. For me, it is not making money. So this company is collapsing. I don't know how you pick this stock. If it is trading, you should know how to trade. You should either follow my strategies or do your own strategies and follow this thing. Okay? Joshua Lu said, then do you move your stop loss up as the stock moves up? Yes. Yes, but it depends. You can see my training level 6, how to use a stop loss, and training level 7, how to follow a trend. Please either send me an email, I will send you the training, or you can just go to golden subscription in the website and do 1 month, and you will find them for free, and you can see what we are doing. We have an investing account, we have a trading account. I show you how to trade, how to search for stocks, how to put stocks for the future, how to sell a stock when it is needed. You will see everything, especially trading account. We have an investing account for those who are interested. We begin only in April 2019, so we don't begin many years ago. This is because I don't find a live. I don't find what we call a. I don't find the demo that I use, but in 2019, E-Trade has introduced the demo, which is a virtual account. So I make virtual account to show you my trading, my trading account and my investing account, and you will see that. Okay? So guys, before you forgot, please send me an email or go to my website if you need me. There is only one question and I finish. Smith Patel, he told me, your thoughts about FCEL. FCEL. Okay. Now see this stock. Fuel cell energy. It is in utilities sector. In electric utilities, it is a company that supplies electric. Now the stock was $11.28 in 2019 and in February 20. It means in 1 year, from $9 it goes to $2. So are you investing or are you trading? If you are investing, you lost money, because from last year to this year it was $11, now it is $2, so you lose your shirt if you invest in this stock. Now if you are trading, these few days there is a big movement, but you should know how to buy, when to buy and when to exit. This you need a strategy. If you are interested, you can come with us and join us in the subscription, or you can buy just training. If you don't know what to buy or what to sell, please just send me an email and I will show you the training or the subscription. Okay, so guys, thank you very much for watching, and now I think it's 2 hours 9 minutes. I got a lot of questions, guys, and I spoke for 2 hours and 9 minutes. I'm tired. I am very tired right now. So, but we will do it again next Saturday and the other days if God wills. So if you have questions, you can send me questions. I can send you answers. If you are if you don't want to wait until next week, if you want to follow us, you just go to our subscriptions. You can use one, and if you don't know how to choose, you send me an email. I will show you What's the difference? You can read. Okay? And thank you very much, guys. And see you next week. Thank you very much.